Okay.
Chill.
Yeah, cool. I got you. I can just share it. Cool.
Yeah.
Well, welcome everybody. It's our third, if I'm not mistaken, episode of the whole fantastic series. I'm Michael. I'm Marco, and this is
nice.
Perfect. Let's kick it off with a beautiful meme we found. We like to.
I made $5,000 while I slept. 1.5 billion acquired by Tesla. Bitcoin to the moon. That's all that needs to be said.
Crazy. I mean, like, it's interesting to see memes just kind of coming out of the craziness that's stemming from the financial markets and Tesla. But yeah, that was big news for sure. Big news. But yeah.
Cool. So what's been happening this week? What the hell happened?
Yeah, okay, there we go. So we see the banner now, right? So one of the first kind of news quickfire stories that we're going to talk about is Amsterdam surpassing London as Europe's top European share trading hub. So the kind of trading volume that Amsterdam Stock Exchanges saw was 4 times in January than it had been in December. And it surpassed, like I said, that kind of volume, which was currently seen in London as Europe's top trading hub, the financial center. And this is mainly because obviously Brexit happened in terms of the UK finally leaving the EU, and the exit agreement that they had, as much as it had covered to whatever extent goods trade, it didn't cover services trade. So what happened is that these financial firms and brokerages, investment management managers, they had to set up subsidiaries in Europe to effectively and efficiently trade as they had done from London based on European stock markets. So yeah, it's a big news, and we'll see how that develops forwards, because I feel like even if Britain now tries to settle some kind of services trade agreement in the next coming years, I don't know how easy it will be for them to kind of bring all of this trade back in, or all of this activity back in from Amsterdam, and the kind of cost efficiency point of view to the firms which set up those new subsidiaries.
Yeah, and it'll be interesting also to see how all the different other major European cities are jockeying and competing for this kind of business. Because, Amsterdam and Paris and Frankfurt and Munich and Milan are all, and Barcelona or Madrid, they're all competing for this. Let's see what happens. So talking about stocks and the stock market, where we noticed that the Bumble IPO, which released some short time ago, actually what happens with these IPOs a lot of the time is they release it for a price, and the same day the stock market shoots up. And in this case, it went up by 70%. So clearly there might be something off there. What do you think, Michael?
Yeah, so what happened with Bumble is something that's been happening with many, especially kind of tech-related stocks and IPOs. And that is that they even open, not only do they increase their price on the day of the first trading, but they even open much higher than the initial IPO kind of subscription price. So obviously investors can come to an IPO, and at the initial public offering, they can purchase some of these stocks at whatever the price the firm sets, the firm which is going public, as well as their underwriters and the kind of investment banks taking this company public, right? And what happens to the price is that, for example, with Bumble, it shot up 70% on the day. And yet, okay, there's a lot of positive news about that, as we see, stock market price good, everything going up, stocks only go up. But then you kind of have to ask yourself the question is that, are these IPOs, firms going public like Bumble, are they not getting ripped off? Because essentially, if the price of your equity of the share goes up 70% of the day, then should that IPO price not have been higher? And therefore that, company like Bumble, should they not have actually rightfully, let's say, collected more money for the sale of its equity than it necessarily had? So even though there's great news and there's a lot of euphoria about companies going public and then it becoming more, valued at a higher kind of value, valued higher than it had been at the IPO, the firm doesn't necessarily take benefit of all the equity kind of valuation which the market poses, as opposed to the investment banks as they had. So it's an interesting topic that needs to be addressed, because I feel like, if you're kind of looking at it skeptically, it's interesting. It's interesting, sorry, to see who's making money out of the undervaluation of these firms going public.
Because the price that the IPO is at is normally based on the roadshow. Because the investment bank goes around to different institutional investors and says, "Hey, would you like to buy a piece of Bumble?" And it's quite tough, but it seems a bit weird that it would go up 70% every time. Actually, no, there was a company that went down the same day. I think it wasn't Uber, it was some other transport company some time ago.
Could be. I don't remember. I know that Uber and Lyft, I believe that they did fairly well following their IPO. But actually, like you said, in regards to the roadshow, there's a bit of a joke when it comes to investment bankers and this kind of asset pricing. And essentially, if you're an investor who wishes to invest in Bumble at the IPO, you go to this investment banker and you ask the investment banker, what is the price of Bumble? Well, the investment banker is going to reply, well, it depends if I'm buying or selling, right? So if this kind of underwriter is initially buying, or these investment banks are initially buying at the IPO, they're going to sell you low, right? The price is, for example, $10. But when they're then selling this IPO at market open and they're kind of showcasing this to the public and they're trying to make a lot of hype for the first day of trading, well, then the price actually tends to be very much higher and the evaluation is much more favorable on the sale of that IPO, or essentially the firm that went public, than when they do buy it initially from the firm at the initial opening of the trading, for example. So yeah, it's tricky. It's interesting for sure.
Okay, so talking about stock prices and shares and values going up, or what happened with Tesla and why did they suddenly decide to invest billions into Bitcoin?
Yeah, so that's a very interesting topic, because I remember when the news broke that Tesla bought a $1.5 billion US dollars worth of Bitcoin. You saw that news everywhere. I mean, every website was posting about it, and it was amazing. And everyone was praising Elon, this, that, and the other. What a great move. And of course, you have to, because not only did they buy the Tesla treasury buy Bitcoin, but they also said that they're going to start accepting, to a certain extent, payments in Bitcoin. So not only did you see a company kind of accepting, or even putting into its treasury this cryptocurrency, very volatile, very, very much kind of a hot topic right now, and has been over the past few years, but you're also seeing become more accepted kind of into the payment system into which people are trying to push it into, and making it go mainstream, right? But, and I'll put on a slide here, there is a potentially more intriguing. I hope you can see the slide. Okay, just went over the whole screen. Yeah, there's potentially a more intriguing kind of sides to what is happening. So obviously, the Bitcoin price, as I'm showing here, around the time of this news coming out of Tesla buying Bitcoin, it shot up about 4,000 US dollars. And even though $1.5 billion US dollars investment isn't that big of essentially trade in terms of pushing the market anywhere or pushing the price, it just kind of showcases to you how much hype can be stirred up by the kind of more mainstream adaptation, the mainstream having adopted this cryptocurrency. Nevertheless, there was actually a Financial Times article showcasing the sort of irony or doublethink of Tesla, and how, even though, for example, Elon Musk and Tesla has been very anti-emissions or pro-electricity, renewable energies and renewable technologies, you're actually showing how Bitcoin is incredibly energy intensive, and it has a very large carbon footprint that's comparable to the country of Norway, for example, since it's very energy intensive. Nevertheless, this isn't to showcase whether this is good or bad. It's just to showcase a kind of prominent presence that it has in terms of its carbon footprint. But the kind of more conspiratorial and arguably fun side of this argument is that, well, firstly, you have to ask yourself, why did Tesla do this? And why did they do it now? Why not a year ago? Why not next week? Why not, a few days before? Whatever. The argument goes that whereas Tesla has been interestingly successful in its business in China, in terms of expanding its business, even during the coronavirus, having its business opened, as of late, it has been having some issues when it comes to the regulation and the kind of further operation of their business, right? So essentially, Tesla has been having some regulatory issues in China. And the argument goes that Elon Musk or Tesla might have done this to create a bit of a smokescreen or a red herring, or, showcase essentially that everything is going well, or not that it's going well, but just create a distraction to the actual situation of Tesla's business. Because even if we look at the stock price of Tesla, it is, as opposed to the past year of great strong rally, even amongst stock splits and stock or equity, what is it called? More equity sales by Tesla. The stock price has been going up, but as of recently, it's been consolidating. So you can see that there's a bit of issue potentially with Tesla's business and the kind of glorious rally that they've had recently. So like I said, the argument goes that all of this that we see on screen and all of this chatter which was created, and there was a lot of it, serves as a distraction to the troubles which Tesla might be having in its operations, potential, future viability of operations in China.
I'd actually counter that. I think that it's more to do with them capitalizing on the GameStop excitement. I really think that the GameStop stuff came down, and there's all this hype, and some people made a lot of money, and some people lost a lot of money. And the ones who lost are probably not going to go in again. But the ones who won some money, now they're on the hype, and they've been injected with this drug, and they're super excited, and they want to find the next big thing. And this crowd also tends to follow Elon Musk and Tesla a lot. So I think they used this opportunity because they knew as soon as the newspaper started reporting that they put in 1 billion, 1.5 billion, which isn't that much money at the end of the day, into Bitcoin. Like,
yeah,
they know it's going to jump up and they're going to make huge cash out of it. The question is, will they always be able to have such a big impact, and will people always follow them? Because if you do it once, twice, thrice, and then people stop getting so excited.
Yeah, I feel like that it's important, because what we've seen Elon Musk do on Twitter is, be very impactful with his tweets and what he says, and how he can include Bitcoin in his bio and have that asset, cryptocurrency, jump up in value. Now, like you said, yeah, there might be kind of like a diminishing effect in that if Elon Musk were to tout these tweets or tout moves like these every single day, a few times a day, then I'm pretty sure people, not only would they get bored, but exactly, they wouldn't have the capital to follow through each and every time. But I would argue that the kind of volatility that we see, or at least the idea that crowds can follow and prices can jump up and therefore fall down just as quickly, is actually more potentially of a negative impact consequence than is something positive and something which Elon Musk might be trying to capitalize on. Because companies holding Bitcoin in their treasuries, they face a very large accounting risk. Because Bitcoin, unlike other currencies, they're considered to be essentially indefinitely lived intangible assets. And so rather than currencies, for example, when Bitcoin, if it's held in the treasury, if it sees a decrease in its value, even a temporary, fall, whatever, it can force a company to write down the value of that asset in their treasury, taking a bit of like a cost, or like an impairment charge is called specifically. That is when the asset value of that kind of asset falls down. And so again, the problem here is that these cryptocurrencies aren't treated the same as currencies, even on the balance sheet of businesses. So as much as you can argue that, yeah, the hype is great and it's going to benefit the value of that Bitcoin holding and therefore the treasury, it can alternatively have the same negative impact. And, considering Bitcoin's volatility, it might as well have, but nevertheless, it might be a bet on the future, of course.
So talking about different currencies and different currencies being valued differently, there's also different types of blockchain currencies that are rated differently. So we've got Bitcoin, but recently we also had a big hype around Dogecoin. So what's that been about, buddy? Because Elon Musk promoted Dogecoin too.
Yeah. This is one of those things that really make you wonder, especially myself as a student of economics, if I really know anything at all. Because I'm going to put another slide up here with Dogecoin. Dogecoin, when we saw the kind of hype around Dogecoin, and I mean, any price movements at all, really, to be honest, I had to ask myself, like, what is the fundamental difference, if any, between Dogecoin Bitcoin, other cryptocurrencies, right? What is it? What is driving its price? For example, what we saw on January 29th, the huge spike here from, this is, each Dogecoin is worth next to nothing. But nevertheless, if you're looking at percentage-wise, I think it made, as of last week, a 1,000% return year to date, which is insane. But nevertheless, yeah, you have to ask yourself, what is the fundamental difference between Dogecoin and Bitcoin, for example? And arguably, there is none in terms of it being, very kind of broadly speaking, the same technology, in terms of anyone can actually, come and create their own cryptocurrency, their internet coin. And so what we see with Dogecoin is meme-driven demand, the kind of the extent to which it can be memeified or whatever, because we can even see that Dogecoin's market cap as of late is 7.5 billion. In fact, when we spoke on this topic yesterday, it was 8.5 billion. So there's been a large fall in that value. But nevertheless, yeah, 7.5 billion market cap now with a trading volume of 3 billion. This just seems like there's a lot of, our friend said that 50% of the float or of Dogecoin is held in 12 different accounts. So this is a highly concentrated market for Dogecoin. And nevertheless, yeah, what I can link to this kind of price spike that we saw on January 29th was the same time there was actually a lot of hype around Wall Street bets and GameStop. And I think specifically January 29th was, I believe, the Thursday when trading halts were introduced on Robinhood. So maybe cash flew from one meme stock to a meme currency. Nevertheless, this all happened around the same time. So it kind of showcases to you the investor base for Dogecoin and begs the question, to what extent should we take this asset, I wouldn't even say an asset, seriously, right? But that's it. Dogecoin is no different, very broadly speaking, than Bitcoin in terms of, at the very least, it being another cryptocurrency which someone can create. There is, of course, differences in technology and the extent to which they're mainstream or not, and therefore their introduction into the mainstream payment system. But yeah, it's more of a meme than anything. I mean, even the name of the asset, quote unquote asset, goes to showcase that.
That's really interesting. I think next time we should have a look at how much pollution and how much energy per coin each of these and how quick they are to calculate. Because I know that Bitcoin takes a bit of time because you need such huge computing capacity. And I mean, how have central banks reacted to this kind of use of more mainstream use of Bitcoin? Because I've recently MasterCard or one of those companies let accepted payments in Bitcoin. But what happens with Bitcoin is that it's very anonymous. So at the moment, the US and other major countries with pound sterling or euro or China, they control a lot of the money and the money flow, and they control the interest rates. So it means that if the US is angry at somebody or wants to put sanctions on somebody, they can just block them and impose sanctions on Venezuela, on Iran. But suddenly, if it's anonymous on Bitcoin, they don't have that power anymore. So they must be really resisting that.
Yeah, for sure. So the unique selling point really of cryptocurrencies to a large extent is their kind of anonymity and decentralization, right? So as opposed to the fiat currency like the dollar or the euro or the British pound or the Chinese renminbi, cryptocurrencies can't be printed. And because they can't be printed, there's no printer located, right? Whoever controls the printer of a certain currency can control that currency, right? And for example, the Federal Reserve can print more dollars and therefore controls the money supply of that. And because of that, they can also, to a certain extent, control where that goes in terms of specifically track the flow of dollars, as opposed to, like you said, Bitcoin, with it being anonymous. There is a potential for criminal activities or just untraceable money flows in Bitcoin. And again, you can argue that as much as that is a negative to the authorities and the government, it's perhaps a positive to someone else, right? I mean, anonymity is one of those double-edged swords, which allows for greater privacy and specifically doesn't permit governments to have total control over an asset or the flow of money, but at the same time protects suspicious activities or illicit activities, money laundering even, for example. But yeah, so when it comes to especially the dollar, it is kind of the reserve currency of the world. It is seen as a safe haven. Not for a long time, it was seen as a safe haven. It was seen as the ultimate money almost, even though we can argue that before that we had the gold standard and gold is the ultimate money. That is an ongoing debate. But nevertheless, what that means is that since I think 70% of the world's trade is done in dollars, and there is a certain entity that controls the dollar and as well can place sanctions on different countries in respect, in respect to dollar trade or dollar transfers, whatever, the U.S. government and the Federal Reserve does have control over that, right? That does have like a monopoly over money, essentially, right? The Federal Reserve has a monopoly over money in Bitcoin and cryptocurrencies. The opposite is true, potentially,
well, that's
right?
Because in theory, if for Bitcoin at least, if you had 51% of the computing power, you would be able to change the ledger. And because the ledger is how it works, there's a history of ledgers, and everybody computes stuff, and they agree that this is the next block. And if you control more of the computing power, suddenly you can decide and say, oh, look, no, my block is right, your block isn't right, and they can twist it that way. And so the question is, and what I think might be happening is China and the US and the major powers, they're all really trying to build up their computing capacity, maybe through quantum computers, to try and be on top of that, because they know it's inevitable. It's going to come. There's whatever new technology, as much as you try to ban it, it never goes away.
Yeah, for sure. So I think the race, as much as you had for the arms race, in terms of the arms race, space race, whatever race, wars, conflict, now we see that in technology, right? And the access to quantum computing and such a computing power, right? Because that then impacts or anything to do with data-driven technologies, data-driven big business, but at the same time, cryptocurrencies, which very much so could become essentially the main payments, or at least mainstream, or at least very important in the next few years or decades or the entire future, not only based on the kind of efficiency that cryptocurrencies bring us in clearing and in transfers, but at the same time, our belief in the idea of cryptocurrencies becoming big, because that ironically chases us to pursue greater technology, to pursue more computing power, which then kind of proves the hypothesis which we used to justify the kind of chase for computing power. But at the same time, yeah, kind of going back to what you said, ironically, there could be a problem, even though I'm not too knowledgeable on the technology and the kind of the ledger stuff that you mentioned. There is a potential that whoever has first reached quantum computing, or broadly speaking, has more computing power, will have more control over this kind of market or transactions, whatever this kind of technology and this kind of ledger mechanism leads to. But yeah, I think the other side to that kind of let's say problem that we're saying, or the kind of how cryptocurrencies are being adopted, is also the use of stable coins, and how of course each government is trying to get their own cryptocurrency out. And so, for example, what we might have from the US is a digital dollar, which will essentially be a cryptocurrency pegged to the dollar, right? So you have a kind of interesting middle between cryptocurrencies and that technology, but at the same time, government control over money and the money flow. So that's where we're definitely headed. In regards to quantum computing, that's a field beyond my scope of understanding even.
100%. Yeah. I think it's beyond all of our understanding. There's something else in itself. Yeah, I completely agree. And then we'll have to see if Facebook or these big companies come up with their own quantum. I mean, Facebook was trying to launch Libra, and that got shut down. But I think they'll try again in a few years. And because initially a lot of companies had signed on. I remember it was like Visa. Many big brands had signed on to be part of Libra, but then suddenly the regulator said no, and the public opinion went against it, and then it just fell apart.
Yeah, maybe it could have been the case of wrong place, wrong time. Maybe too early, because Facebook especially is very much a monopoly in what they do and their business. So then also controlling payments and transactions and money, essentially, that could have been problematic for well, the government, right? At the same time, like whoever else holds the power sees their power being lost to Facebook, private company. With Libra, that's not going to be allowed. But at the same time, as these circumstances change, governments catch on with their technology, and it just becomes more mainstream, there will be a different public push to it, acceptance. There will be larger extent of this kind of technology being adopted, and maybe the Libra will come back in the future. But at the same time, I think that is as much as it is a contingent on public opinion and how cryptocurrencies are in our everyday life. That also kind of depends on Facebook's business, monopoly power, or at least market share, and just whether or not that can clashes with regulation and kind of anti-competition laws.
Okay. So I think it's now time for predictions. What can we predict for next week and then long term?
What can we predict for next week and long term? That's a good question.
Maybe the Bitcoin and Dogecoin. We can have a look.
Yeah, for sure. I mean, Bitcoin has been having a very, very astronomical rise recently. And I remember, if you look back a few weeks ago, it was crossing 30,000. It was going up above its 2017 peak, I think it was during then. And you had the idea that I just can't go up any further. But at the same time, it keeps going up because we're seeing more of it actually being adopted into the payment system. So I think for sure we're going to be seeing more of that. It's almost like a kind of networking effect, or like a social network effect, in terms of at the first time, in the first few moments of this new technology or this idea, whatever it might be, it takes courage to adopt it. There's a lot of risk, especially when you look at public opinion, but it eventually snowballs. More firms accept it, more firms look to accept it, more people accept it, and after that, the price of Bitcoin might also go up, right? Because this isn't not only is the demand for Bitcoin dictated by just how you can, whether or not you can use it, and the kind of actual utility for it, whether that is like a safe haven asset, as some people might assume, or actual use for the transfer of money, but then at the same time, investments, right, and investor demand, because in regards to speculation of its acceptance in society.
Okay. Yeah, I'm really uncertain about that because there's a certain dynamic where it's a lot of the retail investors who are very excited because of Elon Musk and GameStop, and it's mounting into this. But will it drop? I think in the next week it will drop by 5K, and I think long term, I'm not trying to think about it more, but I think it's mainly because of this retail investor effect, because the institutional investors and the people and the companies putting into their payment systems aren't going to be nearly enough in the next week to sustain it meaningfully. So yeah, that's me for the next week. 5K down.
That's interesting. Yeah, it's I'm careful with these predictions just because I feel like, especially with Bitcoin, when it comes to price movements, it can go down 5K, but by the time we get back to another podcast in a week, it will go up another 15, or fall down another 15 before going up another 20. I don't know. It's pretty insane. But no, we'll test that theory and we'll see how Bitcoin behaves this next week. I think we'll definitely be tracking the kind of news releases when it comes to what is happening with the technology and also how it's being adopted. And then obviously kind of the investor outlook or retail investor outlook for Bitcoin. So yeah, it'll be interesting to see.
Let's see how it goes. Cool. I think this has been a really good podcast. I think we covered lots of topics. It was much better. So yeah, I think we'll keep doing this. And yeah, thank you everybody for following us, watching us. If you have any ideas, comments, requests, put them in. We'd also love to invite more people on the podcast to come in and have your say. So that's always open. The door's always open. And unless you had anything else to say, Michael, I think we're good.
No, that's all from me. Thank you guys for watching.
Cool. Adios. Have a good Valentine's evening. We had our